What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over our watch list for the week ahead. This watch list includes names like Tesla, Google, NVDA, Apple, and AMD. We're finally going to go over some of the economic reports that we're expecting this week. We have a very volatile and a very important week ahead of us because it includes things like the CPI and the PPI reports. These will give us the latest reading on inflation. The Federal Reserve is also expecting to hold their FOMC meeting, which is where they will decide the latest interest rate decision. Last but not least, it is a triple witching week, which is something that comes around 4 times a year, and it came before the infamous Black Monday crash of 1987, which was preceded by that triple witching Friday. So we're going to talk about how we're going to navigate markets this week and what we can expect from a week like the triple witching week. So let's go ahead and get started by first talking about SPY, and we're going to do so on weekly candles, where we can see that the market is back above all of its healthy moving averages. These include the 10, 20, 50, 100, and 200-day moving averages. The last time we were brought above this 100-day moving average, which is this light gray line right here, we got rejected and we sold off for the months to come. So many people are wondering, are we going to be able to hold this time, or will the triple witching week effect take us all the way back down to October lows? So let's go ahead and move on to the shorter term time frame and talk about SPY on the hourly candles, where we can see that last week for SPY was pretty much a consolidation week. While SPY and the S&P 500 were consolidating, IWM, which is the small cap index, enjoyed a very strong upside rally, but pulled back on Thursday and Friday as markets consolidated and money flowed back into SPY. So large cap tech has been enjoying a very large upside move, and SPY has been moving with it. But now we saw money rotating into smaller caps and mid caps, which is why this index is starting to go up. So for us to sustain a healthy bullish market, we need money or capital rotation to happen. That way money moves to different pockets of the market and it can sustain the entire market up. So now let's move on and talk about the price targets for SPY. If you are looking to trade SPY this week, you can expect an extremely volatile week ahead. Swing trading is going to be very risky, so make sure you size properly and you give yourself enough time on any contracts you may have. Weekly contracts may not work here. You may want to give yourself 2 to 3 weeks on minimum. If you decide to take on calls for SPY, you can do so safely above the 432 breakout. If it does have that breakout, then it can move to a price target of 433 to 434. But just keep in mind, considering there is multiple reports that are coming this week and the Federal Reserve are speaking, it could mean that the market will have a very choppy week ahead. So this move may not be so smooth, so keep that in mind. If the stock market does keep going, or SPY keeps going and it moves above 434, then it can move to a price target of 436 to 437. Now to the downside, if we pull back even further on SPY and on tech stocks, if SPY breaks below 427.70, it's still in decent range because you could see that this is the consolidation range last week. It was between 425 and 429 or so. After we broke above that level, we held the 429. So if we move back to 427.70, it's not a big deal. Even if we move to 425.75, it's still not a big deal. But if we break that level, then we can see a sharp decline towards 424 and even 420. And that could happen because of any of these events. If the CPI and the PPI report don't come in line and inflation goes back up, which is the opposite of the trend that we've seen over the last 6 months, or if the Federal Reserve come in and they raise rates more than the markets expected, then it can cause a severe downturn. So remember, higher interest rates are like the kryptonite of the market because higher interest rates make it harder for people to spend money, and more importantly, they make it harder or more expensive for companies looking to borrow money. Now, let's move on to our watch list and talk about the first stock, which is going to be Tesla. Now, if you have played Tesla over the last few weeks, or if you have watched our videos over the last 2 weeks, you know that we have been talking about this breakout since the 164 level. So ever since we've been watching Tesla, it has gained a phenomenal 45%, and we can give you a reason for that. The real reason Tesla has been rallying is because of NVIDIA's large upside move on earnings. So we've already talked about this a few times, but keep in mind that anytime shorts or short interest is high in the market, that means a lot of people are betting against the stocks. And so when people betting against the stock lose billions of dollars because the stock goes up and they are forced to close out of their positions, it scares people in other stocks. And Tesla is a very infamous stock to be shorted. Many people have billions and billions of dollars of bets against Tesla. Therefore, when they saw the NVIDIA move up and they lost more than 2 billion, Tesla was soon to follow and they were forced to close out of their positions. And this is what we call a short squeeze rally. In fact, we have seen the short squeeze rally across the market last week in companies like Affirm as well. You can see the stock jump because people are scared. You can also see Carvana, also another company that jumped. You can see the stock doubled in the last couple weeks. And that is thanks to the short squeeze trend that's happening across the market after NVIDIA short sellers were forced to close out of their positions. Now for Tesla, if you are looking to enter, you are probably a little late, so it's very risky to chase the stock here. However, we do have some levels for you and you can play it accordingly to the levels. If you want to take on the stock and you were looking for a bullish breakout, then you are already in a bullish territory. As you can imagine, bulls are very strong and they're likely to stay strong as long as Tesla holds the 241 level. So where did we get the 241 level? If we zoom into the hourly candles, you can see that Tesla pulled back towards 241 last week and you can see that it bounced. So you need the stock to hold above 241 to avoid a sell-off back down. All these buyers that bought it up will be very quick to let go if it breaks below 241, and it can fall towards 230 to 235 from there. Now, betting against Tesla where it's at right now is a very risky bet because the stock is so bullish. You can see that bullish buying volume has been extremely strong. It has been accumulating day over day with very little selling volume because nobody's willing to let go of their position and nobody dares to short sell the stock right now, especially with the short squeeze trend happening across the market. So if we are even thinking about a put or a short on Tesla, it would be a very quick day trade scalp. We would not swing any puts unless we see a severe market downturn and Tesla moves below 230. At that point, we would consider a move down to 223 to 225. For a bullish breakout, we need Tesla to break above 252.42, which is the highest level that it reached last week. If the stock can move above that point, then we have a price target of 257 and a second price target of 262. The next stock on our watch list is going to be Google. We can see that Google had a relatively uneventful week, except for a fact that it sold off severely on Wednesday. But notice even after the sell-off, you can see that the stock pretty much held the same levels that it's been holding for the last 20 days. So if we're looking at Google and we're looking at the shorter term charts, if you are bullish on Google, then you're first going to need it to move above 123.75 to move to a price target of around 128 to 129. Now this is not a true breakout. This is an intra-range play, so we would not consider it for a swing. If you are looking for a swing on Google, you need a breakout above 129.05 and it needs to close above that level. So if you play the 123.75 breakout, only consider that a day trade towards this point. If it closes above 129, then you can swing it. If you are bearish on Google, then you need a move below 119.90 in order for it to move to a price target of around 115 to 116 and a secondary price target of around 113. Keep in mind Google's daily candle is back below the 10 and 20-day moving averages, and it looks like it closed at the bottom of that sell-off last week, which means that it could be setting up to move lower. If you are bullish on the stock, you're going to need it to recover above this blue and purple line, which are the 10 and 20-day moving averages, as soon as possible. If it doesn't, then the stock could easily decline and move to our downside price targets, which is where we would play a put or a short position. The next stock on our watch list is going to be NVIDIA. Now, if you know how we feel about NVIDIA, you know that we're very bullish and we're expecting the stock to continue moving higher. However, it is not surprising that the stock is consolidating in the short term. After the massive move up, you can imagine that too many eyes are on NVIDIA and they're not going to make it very easy for the bulls to get their way. And they're definitely not going to give it to the bears. So the stock is consolidating and it's cooling down from its large side move up. But here are some levels to focus on so you can catch it when it finally does have its big breakout. First of all, if you're looking for a day trade or an intraday trade, you can break out above 405, or you can take on calls or a long position above 405. And the first price target from there is going to be anywhere between 415 to 420. However, we would not consider swinging NVIDIA unless it closes above 420. At that point, it would confirm a breakout, and the stock is likely going to continue towards the 428 to 432 mark. If you are bearish on the stock, then you need a move below 370, 360 in order for it to move to a price target of 366. Below 366, the stock can move severely lower towards 350 to 355. The next stock on our watch list is going to be Apple. You can see Apple has been enjoying an all-year rally so far, and after their worldwide developers conference last week, the stock managed to hold its highs. In fact, it made a new 52-week high at 184.95. If you are looking at Apple short term, here are some levels to focus on. First, you need a breakout above 182.25 in order for the stock to move towards 184 to 185. Like many of the other stocks, we only would play this for an intraday trade, which means we would buy and sell the same day. If we want to swing stocks or swing calls on Apple, we would need a close above 185 so it confirms a breakout. Otherwise, this is only a day trade and the stock may fall back down and continue consolidating in this range. If you are looking for a short or put position on Apple, you need a break below 177.20 in order for you to take it to a price target down to 175.50. Last but not least, the final stock on our watch list is going to be AMD, which unlike NVIDIA, the stock is trading above the 10 and 20-day moving averages. So these two semiconductor stocks have been rocketing and they have been on fire. Buyers have significantly been coming in, but the last couple weeks they have been taking a breather and they are consolidating. So when we are looking at their levels, we are going to be looking at intraday levels, and we're then going to be looking at swing levels. So if you are looking for an intraday trade or for a day trade on AMD, you need a breakout above 127.25 to take it to a potential price target of 132 to 133. If you are looking for a swing trade on AMD, then you prefer to have it close above 133 on the end of day before you can swing it safely towards 136 to 137. Now, if you are bearish on the stock, it needs to break and close below 115.80 for it to move to a price target of around 110 to 112. This would involve it also closing below 123.60 and 120. So you can see there are a lot of supports and resistance points involved here, and that's primarily because the stock has been consolidating in a tight range, and as the stock cools down, it creates new resistance and support points, but the key resistance and support points that it needs to break are going to always be above the entire range consolidation. So that's all we have for you guys, but before we leave you off, we just want to remind you again, it is a triple witching week accompanied with very key economic reports, so make sure you guys position carefully and you guys take precaution where needed. If you don't know what's going on, you can simply stay out and just watch for developments. You don't need to take any trades or force any trades if you're uncertain. Thank you guys so much for checking in. Don't forget to subscribe and like.